I'm going to share with you one of the rules that I wish I knew when I first started trading, and it would have helped me avoid blowing out my first trading account. Yep, blew up my first trading account, and if I knew this rule that I'm going to share with you, I would have avoided that. So my name is Joshua Belanger of Countervest, and we're going to talk about what that rule is. So the rule that I have is never, ever, ever trade earnings. Yep, there's no edge in trading earnings. My first trading account, my first trade, I traded earnings. I lost my whole account. It wasn't a big account, but I blew out my first account. And it was one of the things I didn't understand. Even though I was right on direction, everyone knew the stock was going to move. So if there's no new information or everyone's looking at the same thing, well, it's not really that meaningful. So I'm going to share with you what's known as an expected move. I've talked about this in different videos, but implied volatility is the main aspect of why if you buy options into earnings, you're likely going to lose. Now, some people would say, well, Josh, why don't you sell options? Well, at the end of the day, it's a big old goose egg. Zero. There's no edge trading earnings. No matter anyone out there tells you this, there's no edge. The reason why, it's already baked in. It's already expected that the stock is going to move. Now, you do at times see stocks that have exceeded the expected move, and that typically, when it exceeds that, it's a 2 standard deviation move. But it's typically priced in. And what happens at the end of it is that no matter if you are right, so you could be selling, and then all of a sudden you get on the wrong side of one of these moves, and then that profit that you had is a loss. So there's no edge at all. And you shouldn't be doing anything that provides no edge, because what you have is wasted opportunity. You have commissions that eat into it as well, and there's just no edge. It's already priced in. So right here, we're coming into earnings season. It's the reason why I want to share with you. We have earnings season coming up here. You see it coming in right now. Monday we had 94, tomorrow 190, 315. So we have a pretty active roll up into earnings season starting right now, and we're going to see that for the next couple weeks. So one of the things if you're trading options, especially short term, is you want to be aware of those earnings, and you don't want to hold into earnings ever, never. I'm trying to tell you, no matter what you say to me, of all the information all the data, there's no edge. Some people will tell you, well, yeah, there is no edge, but it keeps you engaged. Engaged? I'm not doing this to be engaged. I'm doing this to make money, right? I'm not to be engaged. This isn't a trophy sport. I want to make money, and there's no reason. If you're trying to do things to be engaged and not trying to make money, I mean that's the most ridiculous thing. It's absurd. Why would you want to do that? So let's take a look here at Vail. Vail is one example I wanted to share with you, because these are the things. It's enticing, because if you follow unusual option activity, or what I follow is hot money. And right here we see hot money coming into the April 20 calls here. And they're coming in within 10 minutes to the close buying some of these calls. Now, to me, I'm like, why are they buying these calls? And it's very enticing. Wow, maybe they know something. And they could know something. Somebody could know what the company is going to release. Positive, better than expected earnings. But again, everyone's focused on this event. Everyone knows earnings are in play here. So because everyone knows that this is a binary event, it's already priced into the stock. It's already baked in. So if you look here, right here for 4 days, this expiration expires on Friday here, and it's already $1 priced in move. So right here, it's priced in $1 higher or lower. Now, if it doesn't exceed that $1 tomorrow, all these options in the front month here and all the way lower to other expirations, you'll see that implied volatility come out of it. And that comes out of the options. So if we don't get a 5% move higher or lower, those options are pretty much dead in water, dead on arrival. And I would say this trade is dead on arrival. I've seen times where you've seen activity like this coming into the options, and they're right. But again, at the end of the day, when I look at all the trading, and I've done this before, there's just no edge, because even if they knew that this information is out there, a lot of times people who buy options are not that savvy. They don't understand how option pricing works. They don't understand implied volatility. So even though that they have this and they get the direction right, they're underwater on the option the next day, even though the stock did move in their direction. So the one thing I could tell you, if you trade options, which is a very difficult, trading options is difficult, but one of the ways that you can make it less difficult is trying to trade earnings. Do not do it. It doesn't matter if you buy options or sell options. It doesn't work because the net result at the end of it is a zero. It's a goose egg. There's no edge. You should only focus on edges you should only focus on what provides you an edge. And trading earnings is not one of those. So if you take one video, one thing, don't trade options. I'm going to share other rules with you in the future, but this is one that comes to mind right now because earnings season's coming up here. And no matter if you're following unusual option activity or whatever it is, or if you sell options, there's no edge. Just avoid it. So that's what I have for you. Let me know what you think. You think I'm wrong? You think there is an edge? Let me know. If there's an edge, you show me, you tell me the edge, and I'll look into it. But I like to know what your experience has been as well. Have you bought an option, like I did, and then all of a sudden you lose a lot of money because even though you were right, the implied volatility came down. And how many times, how much losses did it finally take to realize, this is no edge here. I'm not making any money trying to do this. So maybe options suck, but that could be one of the reasons why, if you did lose money on options, is that you bought into earnings, you held through earnings, and then that implied volatility, what's known as it got crushed. So we'll see you in the next video, but let me know in the comments below. We'll talk to you then.